Welcome to this explainer. Today, we're diving straight into the step-by-step clinical documentation of the market DNA geometric system. Specifically, we're looking at copper cycle 4. Our goal here is simple, really. We're going to systematically review the exact data and visible events recorded in this proprietary framework. No outside interpretations, no external analysis, just the raw, documented events. Now, before we even look at the data, we really need to set some strict boundaries. You see, the market DNA model is a proprietary geometric system. That means we absolutely do not compare it to technical analysis, fundamental analysis, quant models, or your standard pattern recognition. No way. We're operating exclusively within the market DNA lexicon, documenting only visible events. All right, the parameters here are incredibly strict, so let's get the disclaimers out of the way right off the bat. First off, this is absolutely not financial advice. Second, leverage above 10 is strictly prohibited. Third, do not, and I mean do not, invest essential personal funds. This explainer serves strictly as public model documentation. We're making zero predictions here, and we form exactly zero assumptions about future price movements. So, for today's documentation, we'll be covering Phase 1 entry parameters, Phase 1 risk and returns, Phase 2 mirror contact, Phase 3 an event, and finally the Phase 4 completion status. Starting things off with Phase 1 entry parameters. Okay, looking at the visible events for Phase 1, well, they're completely fixed. The primary entry is established right at point M at a price of exactly $6.0405. On top of that, the system also records a secondary entry point, which is labeled PC, down at $6.2704. Now, this geometric system relies on some highly specific foundational parameters. Let's break them down. The calculated mean entry between M and PC sits at $6,335.54. The trapezoid time duration, that's rigidly set at exactly 20 days. We also document a third triangle domain of 5.32%, a risk coefficient of 2, and a contract size of precisely 10,000 units. Moving on to the risk preview. Let's base this on a hypothetical capital of $100,000 with a strict 5% maximum allowed drawdown. That equates to about $5,000. Under those constraints, the expected low price is mapped down to $5.6613. Processing all these values outputs a total position size of 7.41, which sets each trade size to precisely 0.37. And this leads us directly to the governing formula, which states, both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. Still in Phase 1, let's look at risk and returns and the calculated estimates. The defined targets here are completely clinical and fixed. Target 1 is located at the mirror, or the lower trapezoid boundary, at $6.424. Target 2, which is designated for a safe exit, is positioned at apex N at $6.57. And target 3, designated for a full exit, sits at the trapezoid top at exactly $6.708. So, just following simple arithmetic based on those target levels. Scenario 1, which means exiting the first entry at target 3, yields an expected profit of $1,138. That's a 1.13% return. Scenario 2, where both entries hit their respective targets, well, that yields a profit of $2,246, bringing the expected return up to 2.25%. All right, let's transition into Phase 2, mirror contact. On June 12, 2026, the visible data records a very specific interaction. The price physically touches the line designated as the delayed mirror. And in this particular geometric system, this specific line serves as the trapezoid left boundary. This interaction with the lower boundary happened at exactly $6.4565. Now, at the exact time this event took place, the initial positions were actually already established at the M and PC levels we defined back in Phase 1. The event occurred, and boom, the data was strictly logged. Moving right along to Phase 3, the N event. Looking at the chart data from August 4th, 2026, we visually capture the next major milestone. The price visibly reached and touched the N price level. Remember, the chart is entirely fixed and complete up to this exact moment in the cycle. Checking the specific data log for Phase 3, it shows the price reaching the apex N level at $6.57. Now, the log dictates this actually occurred outside the time window in Fractal 1. But prior to this N event even happening, the price touched the trapezoid lower boundary twice from below PC. Because of those two touches, the system's safety buffer was charged twice. At this exact stage, some mandatory position adjustments are documented. Basically, half of the open position was released, and that released portion was appended directly into the safety buffer. This adjusted the safety buffer to a total of $1,458, while the SRB was mathematically adjusted to $5.4626. These are fixed, purely visible adjustments. Finally, we arrive at Phase 4, completion status. To actually log Phase 4 as complete, the rules strictly dictate that the price must reach the trapezoid top. But because this event has not yet occurred in the provided user data, we absolutely cannot add or assume any future price movement. Therefore, its completion is strictly documented here as not shown. The chart data stops exactly where the visible events end. And that wraps up our step-by-step clinical documentation of the market DNA copper cycle 4, based entirely on the visible data. We've navigated all the way from Phase 1 straight through to the end event of Phase 3, intentionally avoiding all predictions along the way. Honestly, when a system is bound by such incredibly rigid geometric absolutes, it really begs the question, are markets just driven by pure chaos, or is there some unseen mathematical architecture at play that we're only just beginning to document? For more public records and raw model documentation, you can visit www.marketdnaedge.com. Thanks for tuning in.